Hi everyone, hope you're all doing well. Welcome into this video. Today we're going to take a look at some of the companies that have reported earnings in the last 24 hours. We're going to take a look at SBUX, we're going to take a look at Tesla, Meta, Airtel Africa and Evolution that have all reported earnings in the last 24 hours. Obviously, there's a lot of more stocks that have reported earnings than just them. For you guys on the Patreon, I will go into a few more stocks that I own and maybe a few ones that I don't own on there over the weekend with some exclusive content. And as well as that, some of those stocks today, I will kind of just like Evolution, for example, I'm just going to read you like the headline numbers, where on the Patreon I'm going to go a little bit more detail, a little more deeper dive on there, because there was a lot of numbers to talk about, because some were good, some weren't so good, and we'll talk about them and kind of break it all down really for you guys in a little bit more detail on there. So if you want more of the kind of nerdy deep dive videos and my like full thoughts on the earnings report, obviously Patreon's the place to be. I'll drop that over the weekend for you guys on there. If you do want to see that, links in the description. It's only £6 a month, or you can sign up annually and it works out a little bit cheaper for you guys. And as well as that, if you want some free shares, join Trading 2 with the link in the description, get a free fractional share worth up to £100. A lot of you guys have been doing that at the moment. Don't know if you're switching accounts for the new tax year or if you have just started investing, but there's a lot of people using it at the moment. So first one I want to start off with SBUX. Really briefly, I just want to touch on SBUX. Yeah, cracking day yesterday, up 8%, and I really did not expect it. Pre-market, it was up like 1-2%. And I thought, okay, the numbers aren't as bad as what they have been last time, so maybe a little bit of optimism coming in. But I thought, realistically, this company is trading at like 32 times earnings, forward basis now 36 times earnings. I owned SBUX for a brief period. I only had it for like a couple of months. Stock shot up crazy after the new CEO came in. I think I made I can't even remember what it was. I've got 20% in my head for like a couple of months, I believe it might have been. Made a quick return on it and I sold it, and I just went, you know what, 32 times earnings for this company, 36 forward times earnings. There's still a lot of issues here. Yeah, the numbers were a little bit better than what they have been, but they're still terrible. Revenue growth wise is, you've got a company that's not growing at all. You're starting to look at the reward loyalty program. It's up 1% overall. I think it looks at the EPS point of view, but I'm sure the profit was down overall, which I haven't actually loaded it up, and I'm going to quickly talk while I try find it. Yeah, so here, earnings per share was still down. This is what makes me laugh, is like, you got these numbers here and you go, oh, they're beat by EPS by 0.2, it's absolutely amazing. And then you actually look at numbers and you go, still on an EPS basis, it was down 22% from last year. That's more than the revenue being down. And for a company like SBUX, you probably want the profit to be a lot better than the revenue. So I was like, this is why I sold it, because I thought, I don't think this stock can go up a little bit more. And even though the stock is going up, well, it did go up a bit yesterday, I just don't know why. I don't know who's coming in now at 36 forward times earnings and going, that company that's EPS is down 22% and the revenue's flat, that sounds like a good buying opportunity. I don't know. That was a move that completely surprised me yesterday. Two moves that surprised me is the reactions to Tesla's earnings and Meta's earnings. I think Tesla was down and then it went up after the reported earnings, and Meta was down as well, and it's up about the same. But really, Tesla and Meta are basically up exactly the same amount today. And in my opinion, one of them had a fantastic report and one of them had an atrocious report. And I don't know how these stocks are up exactly the same, because in my opinion, one of them should probably be up a lot more. The other one should be significantly down, and that one being Tesla. I mean, you talk about some earnings being poor. I mean, this has been poor for how many quarters now? And yesterday, once again, I saw these numbers and I was like, wow, this is ugly. This is really ugly. You're looking at a miss, and the miss was $1.44. You're talking nearly over like a 5% miss on an EPS point of view. That's massive. Adjusted EPS was a miss. Revenue was a miss as well, I believe. It was awful. And yet the company now is, these numbers haven't been updated from where it is right now. This is saying 106 times earnings. I think because they've missed again so much, I think the company is like, it's like 160 times earnings, 170 times earnings for a business. I just don't get it, because you look at the numbers overall. So if I go on Tesla's earnings, let's have a look here. So 2% revenue growth. That's terrible. You're paying 160 times earnings for a company growing at 2% revenue growth. If you look at the EPS point of view, does it show how much the EPS went down by? Let's have a look here. So gap margin, Yeah, margin was down as well, another 138 basis points. Where is their EPS? EPS gap. So the EPS gap was down 71%, and yet the shares are up 2%. That's bonkers. A company just went, yeah, our profit just went down 71% from where we were a year ago. Everything's okay. Pay 180 times earnings for us. It's crazy. But, Musk came on, he did his normal kind of thing like, hey, don't worry about what's going on, guys. It's an absolute car crash in our financials. Trust me, in the long term, you'll be okay. I just, I don't understand how people keep going in at 102 trillion market cap. This is the most hope story. Yeah, I really hope full self-driving works out for you guys, because to be paying 102 trillion market cap for this company for what might happen is absolutely bonkers to me. It says it's going to, I think it was June, the date that was thrown out in this quarter to keep everyone happy and everything's going to be all right. Honestly, it's the biggest stock out there in the stock market with the most ridiculous valuation I've ever seen. And if this doesn't work out, oh my days, it's going to be ugly for these shareholders. And I hope it works out for you, because there's so much of that priced in right now. Because if we were actually doing Tesla over a financial point of view, the stock wouldn't be where it is right now. It would be a lot lower than where it is right now. So we'll see what happens there. And that happened with Meta. Meta was up exactly the same, but yet, this is 31 times earnings. 26 forward times earnings. Because of the big beat on the EPS, it's probably actually lower than 26 forward times earnings now. It's probably even 25, 24 forward times earnings. 20% revenue growth, so 10x the growth of Tesla. I saw a few people come out, and I think they said the guidance was weak. And I had a quick scan, and they said the consensus was 41.6 billion, and it was in the guidance. It was the higher end of the guidance, but that's what's going to happen. Meta, Mark Zuckerberg, one of the best CEOs out there in my opinion. He's not stupid. He's not going to throw the higher number, out there at the low end of the guidance. He's going to go, okay, let's keep it sandbagged. Let's make sure we can hit our targets. And then what we can always do is upgrade as the year goes on. And that's what the best companies out there do, and normally get rewarded from it. So yeah, I thought these Meta earnings were fantastic. So yeah, I can't believe that Tesla and Meta were up the same amounts. South Africa, wow, what a rally this has been on. Since about November time, stock is up 53%. I think I'm now up 43% on my position. Yeah, it just shows you it's been a bit of a, this is what patience comes down to. Basically being 2 years of the stock doing nothing. In fact, it's probably been a 2-year downturn for South Africa, and whenever the opportunity is there, just having a couple of nibbles there, on the stock, and then very quickly, boom, we're up, 40% on the position. And if you had been buying every time that kind of stock had into that, that below that £1 range, yeah, you're doing really well off it. And I guess that's, it's tough. The stock market, this is what I say about the stock market all the time. It's not just being knowledgeable. It's not about having good understanding about businesses, financials, running valuations. It's also a bit of a mind game, because so many people for the last kind of 2 years have sat there on this stock and gone, Jesus, give me something. 2 years, and imagine at the time frame as well, so many stocks have done quite well, and you're getting a bit fed up about it, and then within a snap of your fingers, boom, stock's up 5%, like that. That's how quick things turn in the stock market. Click of the fingers. It can work the other way where stocks go downwards. It can work the other way where stock goes upwards. And, this is one that I've been sat on for the last 2 years, and I've been there going, friggin', this is an absolute ball ache how long this stock hasn't really rallied up for. And then there we go. Today I'm up 42%. And then obviously you add the dividends on top as well, because obviously that's, coming towards 2-3 year period. Obviously the yield's a little bit less now, but it was towards a 5%. Throw dividends on top, you're up about 55% on that position, and that's absolutely great. And there's people during that time frame that have given up on it. There's people that would have sold and gone, what's going on in this stock? I'm fed up of holding this stock. It's not doing anything. I'm going to sell it. That's why patience is so key with South Africa. Also with this one, I mean the financials were absolutely amazing once again. You look at all the financial that was in here. ARPU was up, the customers was up, the data was still strong, up at 13%. Data usage was up 32% as well, which is great. Revenues was up 20% as well. EBITDA, obviously when you're taking the financial impact was down, but obviously if you take out the impact from the EBITDA, all the metrics were moving in the right direction. This is what it comes down to. It comes down to that FX impact, because all these numbers have to then get adjusted for this FX impact. It's it's held the stock back for a little bit, but what people are seeing now is that big slump that we had in the FX impact, where it fell 71%. It's all going out the way. We are, as of today, really out of that FX impact. For the last kind of that happened at the back end of January. As we got into February, we've kind of neutralized, and the FX hasn't really moved that much. It has moved a bit, but nothing like what it has been moving. You've kind of gone through the FX impact now. So all these great financials that we see, but it never shows on the bottom line because they have to take in the FX impacts because they report from the Nigerian naira to the US dollars. All this FX impact is gone now. So the thing that we've kind of been waiting for has happened now. And as we see that happen, the stock has started to peak up a little bit because everyone knows it's starting to get to the bottom line. And we start looking at next year's numbers now, and we'll go SLF is 11 times earnings if there's no more FX impact, which is probably about fair for the stock. So for me now, I'm kind of at the point of view, like, where do I kind of go with this one? I'm not really sure, to be fair, because 11 times earning, I think, is pretty fair for this company, and it has been tough sitting out on this stock for the last 2 years, and you kind of being like, give me something, and then all of a sudden you're up 42%, and if you add dividends on top, you're probably up even more than that. It's kind of at the point of view now where I'm like, it would be nice to kind of like walk away with profit now. We were here to make money. I've made the money. I've had the patience. I've been rewarded for it. Take the reward for having the patience. That's kind of in my mind right now of like, do I go do that? The other thing that's in my head is like, you've stuck through this FX impact for so long now, and it's gone out of the system, that these fantastic numbers are actually going to start getting shown in the financials. So if you imagine that this company starts growing at 20% per year, let's say that all ends up going to the bottom line, and the EBITDA, the EPS, the revenue, so the profit is growing at 20%. I mean, that will probably mean the stock probably still do quite well from here, won't it? So it's a bit of a tricky one now. Is like, do I kind of walk away now and say, right, I've kind of stumped, I've gone through this FX impact and lock in that profit, and if anything else happens, I'm away from it now, or do I kind of go, well, you've held through all this FX impact. What happens if there's no FX impact for the next 2 or 3 years, and this grows at 20% for the next kind of 3 years? Would you kind of look an idiot for selling it for, you finally made it out the other side and then you sell too early? It's a tricky one. I don't know where I'm at with this position right now. Any of you guys want to throw anything in the comment section? Let me know, because I am so undecided about where I go with this position right now. But it's a lovely issue to have, isn't it? That you're up on a position, and do you lock in the profit, or do you think it can go higher? It's not the worst situation to be in, is it? That leads on to the last one, Evolution AB. The stock is currently down 5% as of recording this video, but when the US market opens, I'm sure there'll be some more price movements going on with the stock. 5% down. Yeah, I don't really know why the stock is down. The financials, there was a few things that could have been a little bit better in it, but it was still a solid 8 out of 10 in my opinion. And realistically, when you look at the earnings, you've always got to look at the context of where the stock is valued. So, for example, when I look at SBUX, I went, yeah, their earnings were still going in, it was starting to move in the right direction, but you're already priced as if you recovered, which doesn't make sense to me. I look at Tesla and I'm like, yeah, it might be great if the future hits, but isn't that already all priced in at 160 times earnings? Meta, I'm like, I think these are good earnings for a 26 forward times earnings business. South Africa, that's actually bang on the middle, where I'm like, if this was like 7 times earnings, I'd be like, yeah, you know what, it's probably worth me still holding from it, but it's actually where it normally trades at, so where'd you go from there? Evolution, I'm like, let's just take a market average value of 20 times earnings. Like, that's a bang normal average Joe company. Like, you're talking like mid-growth, 5-6% a year. You'd say 20 times earnings about right. It's about probably the average growth of the S&P, isn't it? Something like that. 6% a year is about the average growth of the S&P. That's about bang on where average is, right? So you look at this company here and you're like, well, it's 13 times earnings. So it's below what the normal valuation for an average kind of business is here. But then you look at the financials and, yeah, you know what? Maybe you go 12% revenue growth, a bit slower than what maybe you'd want from it. It's still probably double than the average company out there, which is great. You know, you look at all the profitability metrics, adjusted EBITDA excluding other operating revenues, up 7.9%. All the metrics were moving up in the right direction during this one. When I do my full breakdown, we'll go a little bit more into the profit, because the profit margin went up, but there's a lot of movement in there as well. If you look at EPS was up 37%, but there was a lot of moving numbers in there, a lot of tax changes as well. But overall, everything's moving up in the right direction for, you know, Evolution. And you're getting it below a market average valuation. You're also picking it up for a 3.7% dividend yield. And today they've just hiked up the dividend another 7%. They've just thrown another 5%, because they make up so much profit. And let's not forget, you know, normally a company with a higher profit margin, you put a higher multiple, because they're making more profit. That means they can throw more into a share buyback, more into a dividend. And that's what we had today as well. You know, they threw another 500 million, I think it was, into a share buyback, which is another like 3% of the market cap. That's obviously not in US dollars. In US dollars, I think this is like a 16 billion market cap. So they bought like another, 3% of the company. And that's what you have with a company that has so much profit like these guys have. And then you also think about the clear growth drivers ahead. Like, we know this company is still at its early innings for its cycle. We know there's so many countries that they're set to expand on. We know the US has the potential to be the biggest iGaming country in the world, and they're only in 5 states. So when they are allowing more states, then this has a clear path to do very well for the next 5-10 years. We're not looking at this and thinking, oh, this market looks a bit, is it going to grow that much going forward? Because we look, and you look at like Brazil, the US, there's still major growth drivers for them. And it would be great when we do have the likes of a New York that comes online. I think that will be like the sentiment change around here, is when they do get another big iGaming state online. I think sentiment will change massively. Worth pointing out that the New York current bill that has gone back in again for this year, the tax is actually 33%. To put that in reference, the sports betting tax, I think, is 45%. So the iGaming tax will be a lot lower, and it's also a lot more profitable than sports betting. But that's obviously expected to go through this year. If that goes through, we'll find out in summer. That could be a major catalyst. You know, you're getting nearly 20 million people to come online, to come onto the iGaming side of it. You know, you're getting the 4th biggest state, the biggest one that they've had today. If that happens, then all of a sudden, that revenue growth that you go, oh, well, it was a little slower than what we maybe wanted, very quickly, we'll shoot back up again, and everybody goes, oh, look at the growth coming back. The growth comes back. How much flows to the bottom line? There'll be a lot flowing to the bottom line, and that will all, everything will be forgotten. But even though, while we wait for those kind of catalysts to come, this company's still doing well. Let's not knock 12% revenue growth. So many companies would kill for that. Let's not knock, a lot of the profitability metrics, the EPS, still going up in the right direction. Let's not knock a company that just increased the dividend by 7%, clean balance sheet, another 500 million share buyback going on. These are all things that a great company is doing. And this great company right now, in my opinion, 13 times earnings, it probably shouldn't be there, should it? So, I always say, like, I was just on about it on the Discord, is that, it was Lemon on the Discord, he said, you said it could be 25, 30 times earnings. Do you still have that, point of view there? And I was like, well, yeah. This is, in my opinion, this is not an average company. This is a premium company. So I do believe it has a 20, 25, 30 times multiple on top. Maybe not 30 times while this growth is sinking down, but you throw that New York iGaming state back on there, yeah, every metric will go shooting back up, and then you probably put a bigger multiple on it. But 25 times, for sure. This is a premium company. I don't understand how you could not say it's not a premium company. So I would say 25 times it should be there. But for me, right, the great thing for me, and you guys know this, is whenever I show you guys the numbers, I never assume crazy multiples. I say, I'll show you it and say, if they do hit these numbers, that'd be great. That'd be amazing if they hit these numbers. And I think it could get to these multiples. But I have a safety net. And right now, I think that when I look at Evolution and these numbers, I think this is a great company. It's definitely an average company at least, and it should be 20 times earnings. So you throw 20 times earnings on a company that's growing at these sort of levels with that dividend you're going to receive on top, that share buyback on top. Yeah, I think there's a lot to like here. But like I said, we'll dig into those numbers in the conference call a little bit deeper on the Patreon when we do the earnings review. I'm probably tempted to give Evolution its own review on its own separate video on the Patreon when we do get around to it. So I'll probably do that for you guys on the Patreon over the weekend and go a little bit more deeper dive into it. But yeah, I just wanted to give a quick recap on StarBucks, Tesla, Facebook's earnings, South Africa's earnings, Evolution's earnings. Few to talk about there. We've got to talk about some of them in earnings season, and yeah, there's plenty more that we'll talk about as well on the Patreon a little bit towards the weekend. Anyway, thanks for watching, guys. I hope I see you all tomorrow. I'm probably going to have the weekend off because there's so much Patreon content that I want to do. So I'll probably do a video tomorrow for you guys, and then I'll see you on Monday. The video I'm going to do on tomorrow will either be the UK stocks I'm buying or the US stocks I'm buying series for February, which is crazy to say that we're getting towards February already, which is good though, because I absolutely hate January. It is sorry for anyone that's born in January, but I believe it is honestly the worst month. It's depressing, isn't it? It's always cold, it's rainy, nothing to look forward to. Everyone's fed up after Christmas, so I'm glad that we are kind of moving on to February anyway. Thanks for watching anyway, guys. See you in a bit.